Friday, May 11th, 2018, Monaco 64, home of alternative economics and contrarian views. I'm going to talk about one of my favorite subjects, central banks. Not that I like them. I actually want them to be, well, I'm wearing my End the Fed shirt today. I actually don't like central banks. I don't think they're a free market institution. And I'm going to look at how central banks have no skin in the game, to borrow Mr Taleb's term and title of his book. I spoke about this book a few weeks ago. I just bought the book. I've started reading it. And there's a section here that I found quite interesting. And it's got to do with simplicity. He doesn't talk about central banks, but when you're reading things, you can think, oh, this is like this, you know. So that's what I'm going to do. Today is another beautiful day in London. It's still quite early, 7:30 a.m. I'm going to be playing golf later on today with some friends. We're going to play at a charity day, so that's interesting. And then we're going to have a dinner at this. It's not at my club, it's at another club. So doing this video early to get it done. Maybe I'll do a live stream later on today. We'll have to see how late I get back from the dinner. There's going to be like an Elvis impersonator at the dinner. So that should be fun. So the markets this morning, what are we doing? Well, yesterday, the stock markets continued to rally quite strongly. We saw the dollar turn around a little bit. I was looking at some charts. Actually, the Chinese yuan, CNY, and the dollar index. And the Chinese yuan strengthened quite a bit yesterday against the dollar, so the dollar dropped a lot. And I compared some of the charts in the last few years. The Chinese yuan is kind of tracking the dollar index. So I think the dollar might have topped here, short term. Stock market's still really strong. So let's have a quick look and see what's happening this morning. So as I said, it's 7:35 a.m. We've got spot gold, 13.1920. So it's down about 2 from the late close, COMEX close yesterday. This is spot though. The high overnight has been 13.2240 and 13.18. So gold and especially silver had a very good day yesterday. So I think we held that 1302 level. You're never sure, of course, but I have a feeling that gold is kind of done really well in spite of the strengthening dollar, and the fact that we're here is pretty encouraging. Spot silver 1666, down 4. Range has been 1666 to 1676 overnight, so we're near the lows. Dow futures is down 11, 24,711. The S&P is down 3.5 points, 2717. Nasdaq 100 futures down 13 at 6946. So slightly weaker. The stock market's not much to write home about. Currency-wise, we've got the pound still very weak, 135.02. down about 16 pips, right near the lows. The high has been 135.35. Euro 118.95, down about 20 pips or 0.16%. And the dollar is virtually unchanged against the yen here, 109.40. And it's actually rebounded against the yuan. Yesterday, I think it dropped like 2/3%. This morning, it's up about 0.14% at 633.80. That's the USD CNY dollar versus the Chinese yuan. What about the bond markets? Well, the 10-year yield is still having a tough time getting back above 3%. Still, bond market's still holding there. We're at 296. But the 2-year is relatively high. It's at 253. Mr Taleb's Skin in the Game. I'll put the link below in the description if you like to get the book. And why do I say central banks have no skin in the game? Well, because central banks are a monopoly. They're bureaucracy. They also give the banks that are its agents, the member banks that are under them, the commercial banks, they make them like, how can I say, they have no skin in the game as well. Goldman Sachs has no skin in the game. JP Morgan has no skin in the game. And we can see back in 2008, that's proof of it, because they took all the risks, right? And when they do well, they take all the profits. But when they lose and almost collapse, they're saved by the taxpayers through the central banks. So they have no skin in the game, and nothing has changed. Basically, it's moral hazard. That's what central banks create, moral hazard. And so what about simplicity? Well, it's on page 29 here. And I'll quote Nassim Taleb. Simplicity. He says, "Now skin in the game brings simplicity, a disarming simplicity of things properly done. People who seek complicated solutions do not have an incentive to implement simplified ones. As we saw, a bureaucratized system will increase in complication from the interventionism of people who sell complicated solutions, because that's what their position and training invites them to do." And he goes on to say, "Things designed by people without skin in the game tend to grow in complication." And he puts it in brackets, before their final collapse. So what's that got to do with central banks? Complication, bureaucracy. Well, I'll give you an example. When the Fed or the FOMC has its usual meeting, and not at all meetings, the FOMC will do a press conference, and they'll talk about the economic outlook, and the Fed chair or chairman or chairwoman, now it's the chairman, will sit in front of the press, and he'll bring up charts or talk about dot charts. He'll talk about forward guidance. He'll talk about expectations. He'll talk about statistics. He'll talk about things that are really boring. And if you if a normal person tunes onto it, he'll not understand what's going on. So it's complicated. Bank of England, for example, they had their MPC meeting where they decided not to do anything on Thursday or yesterday. Then they have the inflation report. They've got the same. They do the same thing. And I remember years ago, in the 90s, when central banks announced rates, they just announced, "Oh, we're going to raise rates," and that's it. There was no press conference. There was no talk. There was no projections. There were no charts, dot charts. There weren't people, analysts and economists, combing through every word that they said. If they changed a comma or a punctuation mark, that would affect the markets. Back then it was simpler, even though it was still a bureaucracy. The markets just looked at what they did and that's it. But now it's getting so more complicated that they need all these this technical jargon, and that's why people call like Jim Rickards, for example, calls central bankers and the economists behind the system PhD economists. It gets more and more complicated. So what's the solution to that? Well, the solution is to end the Fed, have a free market in money, and it's very simple. Markets are very simple. Markets are just supply and demand and exchange ratios between commodities, between stocks, goods and services, and interest rates are determined by the market as well, by the supply and demand for savings. We don't need the central banks and the bureaucracy to make it complicated. So it shows that central banks have no skin in the game. Another example, during the financial crisis of '08 and the wake of the crisis, when they were like saving the system, they came up with TARP, Trouble Asset Repurchase Program. They came up with QE. They make it complicated so the public doesn't understand it. Basically, TARP was just a bailout. So it just shows that they make it complicated. QE is just money printing. And then now they call it balance sheet unwind or QT. Yeah, it just goes to show that they have no skin in the game. And that's why, and he mentions here, as I said, things designed by people without skin in the game tend to grow in complication before their final collapse. So let's hope Mr Taleb is right about central banking and their final collapse. Yeah, there's too many people in this system of fiat money. They got to make it more and more complicated. And I think it started out probably with Keynes. And then you got all the... that's why the PhD economists, the Keynesians, they don't like the Austrian School of Economics. Even though they are academics of the Austrian school, their philosophy is that you should leave it to the free market and that economics is based on human action. And they don't believe in all this PhD economics. Philip's curve is another good example. All this rubbish. So yeah, that's why when you watch, if you watch, sometimes I watch these press conferences. That's why now I know why I feel frustrated. It's because of that. They've got no skin in the game. They don't. They're just academics. Not that academics are bad, but in this case they are. They think they know how to run an economy, and an economy needs to be run by the interaction between, well, in today's case, billions of individuals making decisions of what preference they have for several, well, millions and millions of goods and services. So yeah, that's what I wanted to talk about then. Let's hope central banking doesn't last that much longer. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, Twitter, and on DTube. And when you share it as well, make sure you share it throughout all your different social media platforms, so we get some network effect. Yeah, I'll talk to you later, and have a good day. Take care. Bye.